Hi friends, this is your Vishnu Guptan from Malu Market Profile. With a repeated request from our beloved trading friends from other language, we are going to start Malu Market Profile basics videos to advance in language English. We did this video in Malayalam and that video is available in our YouTube channel with the link is already shared in the market profile details. So what we are going to take today is we are going to start our market profile basics to advanced video, and we will and we will cut down every market profile aspects in 10 videos for you to understand and trade the new technical charting concept called market profile. So all of you to watch my video and just study market profile using our YouTube videos. Once again, a warm welcome all of my trading friends to our YouTube channel Mallu Market Profile. So market profile is a structure which was introduced by Peter Stedelmayer in 1959. Why he introduced the system? Because you know that there was a kind of a strategical trading charting tools called candlestick pattern, line chart, Rengo chart, and every candlestick patterns people are using it. When why he introduced means once upon a time when he was a trader in Chicago Board of Trade. He was trading the time when he noticed that at some particular time there is some kind of a volume is happening at a particular price in a wheat contract or some other commodity contract. So he noticed that and came some which one answer for his query that when suppose at 11 a.m. in the morning session of CBOT there is a good buying is happening in wheat future, and if that buying is coming in the wheat future, the market is giving a good upward move and the wheat future is closing at the higher price of that area. So when he noticed this, he came to know that he can do a new charting method. He started developing it. Then he started developing a new charting method called market profile, which is called a time price opportunity chart. So how he came to arrive means he given a concept called time price opportunity chart, and the vertical axis mean time. He put the time, and in the lower, if you see lower time frame and time, and he put the price in the y axis and horizontal axis so that people can understand at what time which price was traded. This is how he introduced market profile charts in 1959. This market profile chart was used by the institutional investors around the CBOT guided by the Stedelmayer till 1985. And once the Dalton came into picture, he was the student of Stedelmayer. When he came into picture, he publicized and we introduced to the public in 1985. This is how the journey of the market profile started. 1959 May, it started by it invented by Peter Stedelmayer, and 85 it is made to public and introduced to public by whom? The Dalton. This is how the market profile structure is started. The two important parameter of the market profile is defined as one, what market is doing. What market is doing? For example, if the market was trading in between 24,400 and 24,100 in last 1 week, will you say the market is a range market? I would say allowed to say that market is in a range. This is called what market is doing. And the second question he given to the people that is it doing a great job or a bad job? Or a great job we can, is it doing a good job or a bad job? How you can able to identify is it doing a good job or bad job? If your trade is making money for you, you can say that this is doing a good job for you. If your trade is making a loss, or you are able to exit at the cost, it is giving an answer that it is doing a bad job for you. So the by understanding the market profile structure, you can have two answers for your trading setup. One, what market is doing, and the second one, what is it doing a great job or good job or a bad job. This is how the market profile structure is giving your answer. The second, market profile is also it is a medium of listening to the market. Purely every charting pattern is a medium of listening to the market. Every chart, whatever, if you, for example, if you see, if you look the market profile charts now, if you can look it. For example, if you look at the market profile charts of any softwares, anything, any index, anything. For example, if you look for the candlestick patterns, so you can able to identify. For example, I will show you. The thing is that if you are seeing this is the candlestick pattern of last Nifty future last 1 week. So if market was open in 24,550, market was low was 24,91, 23,911 in the Monday. Uske baad, after that, what is happening here in the market? The market is giving a great range. So this is how you can identify that what market is doing. What market is doing? Market is doing a range trade for you. The second, the answer will be replied by using what answer? The second answer will be replied using what is it called? What is it doing a good job or bad job? How you can identify it? Your trade setup will give a profit or loss. When it is giving a profit, you say you can give the answer. It is doing a good job for me. Arey yaar, it is doing a good job for me. And the second one is it doing a bad job for you? You are making a loss. When you are making a loss, when I am making a loss, then only you can understand that it is giving a bad job. And what is the market profile listening to the, when you see a range market, you are listening to the music. For example, if you are listening to your favorite music, means you are able to understand what the music is giving. You are able to understand the lyrics behind it. This is how the market profile is also a tool like a candlestick pattern. It is also a tool for listening to the market. When you listen properly, you can understand properly. Clear? A market profile is statistical representation of a bell curve. You know that a bell curve. The bell curve, I'm going to second slide. The bell curve. The bell curve means it's a graphical representation of a normal distribution of a shape of a bell. For example, in Corona, for you know the Corona. What there was a report came in last couple of weeks back regarding the equity investors trading mentality by SEBI. SEBI put forward a thing and came forward a report that 7 out of 10 intraday traders in equity are making losses. They are losing money. And 3 out of 10 traders are making money. And they came up with a now which one very precise report that in between 20 to 30 years somebody is making huge money and they are mostly into intraday trading. How they are doing this kind of representations? They are identifying, they are margining it, they are forming a distribution, and they are finding that this area is making huge profit, this area is making huge losses, this area is making small loss, this area is making small profit. This is how a graphical representation of everything, every economical activity, every things happen to the society, world, every economics, everything will be represented by a bell shape. So when you see the top of the bell, means it was a lot of mean and data highest activity happening. The lowest, the right side and lowest left side, you will say the lower level means the lesser activity. Bell curve it is commonly used in statistics, including analyzing economic and financial data. You know everybody which is using this kind of activities. So I don't want to give a which one deep in study of this one because we are going to study the market profile chart. Hope you clear it. So in like what happened in the candlestick pattern, here in the market profile chart we comes to say that it is an auction market. We call it's an auction market. And we used to say price action in candlestick pattern. Likewise, we used to say auction market theory in a market profile chart. What is an auction market? Buyer and seller comes to a place which is called a market. For example, an antique auction is happening. So I am a buyer, you are a seller. Or somebody is a seller, I am a buyer. I am ready to buy some painting. I love to have many paintings in my home. So I have immense cash and I go there a place called Antiques Painting Auction Area. I go there and I will look for the paints. If I am finding a good paint with a reasonable rate, I will bid my buying. This is how auction a buyer and seller will come. There will be multiple auction will happen. Suppose if somebody is giving a base price of $1 lakh, somebody the auction start 1 lakh and 1, 1 lakh and 2, 1 lakh and 3. Likewise, the auction is going, and once somebody for the seller area is finding out a appropriate price with the buyer side, that is fairly pricing, that is called a fair price. When the fair price comes into picture, what happened? The trade mechanism, order matching mechanism is happened. When the order matching mechanism is happening, then the trade is happening. This is how an auction market is happening. Clear? The auction market theory says this only. Price means it is advertising the opportunity of home. Which one? Picasso's painting. It was traded. It was a good painting, which is was trading at 5 cr. Now the Picasso paint is giving a 3 cr move. So you see when you see a 3 cr, oh array, this is painting was sold at 5 cr to somebody. When you see a 3 cr, that is a price where it is good. The price advertising the opportunity. Oh, 3 cr, something is happening, or else somebody wanted distress selling. I can buy that price painting in this price. I'm saving 2 cr. So price is advertising the opportunity of a market. And time. For example, if Hindenburg news came in last day, Sunday, or Saturday आ गया, it news came on Saturday, what happened? Do we can trade based on that news in Adani stocks or any other stocks? We can't. Why? Our market is closed in Saturday and Sunday. So there is no trading opportunity in the world market also. So the time regulates the price opportunity. If some price is there, but you want to take part the price opportunity, the time has to support you. If no market is happening there, how you can buy the price? This is how time regulate the opportunity. And the third part, which was introduced by Dalton, in addition to the Stendelmeyer's theory, it is called oleum. Oleum gives success measure. Oleum measuring the success or failure of an auction. For example, there was a thing happened regarding the tomato price last year. I think the price of tomato gone up very largely. Uske baad what happened? The market flooded with the tomato and the price largely came down. What happened? Oleum came into picture. So somebody, if I am going to buy tomato, there is only 200 box of tomato is available, the tomato price will move up. But instead of that, there is 2 lakh tomato is there, and what will happen? The price will drop. That is why the measure of the success of failure of an auction is determined by oleum. So when the oleum comes into picture, which indicates that risk management activity, you need to be careful. So what is that auction market theory comes into picture? Auction market theory says to that price advertise opportunity. Reliance is trading at 2 to 3,000. Reliance came down 10%. It is the best price to buy. So what you are looking? You are looking into the price only. And the second time, the time which regulates the price opportunity. For example, 330k after there is Reliance is trading at 2000 means you can't buy. Why? Because there is no exchange is trading at 330 baht. 330k after there is no exchange, no trading time. So you can't buy it now, even though you are seeing a price, close price is there, but you can't buy it. That is why time regulate the price opportunity. And the third part is volume. Volume determine the success of a breakout or breakdown. Or if only without, that is why people were saying that Without volume, nothing. The market comes down without volume means it will fail, and market goes up without volume, which means it will fail. So the volume gives a success ratio. The volume supports the success ratio of an option market. This is how every market, every pattern, every candlestick or everything is working. This is how the price, people will say in a candlestick pattern it will say as a price action. Here we will say auction market theory. That is a simply difference. So when you came to picture, you know that there was a question now in 950 into 945. You are a day trader with a 5 minutes candlestick. You are following a 5 minutes candlestick pattern. If you are following a 5 minutes candlestick pattern, how many candles you will see in a half an hour time? For example, this is the, I'm looking, this is the 5 minutes, 9:40, 9:15 to 9:45. 1, 2, 3, 4, 5, 6. You will see 6 candles. Instead of 6 candles, marker profile will show you one letter called A. So, in a marker profile structure, instead of candle, the structure is denominated by a letter called that is called price opportunity. It's a letter based charting setup is called market profile. So simply speaking, it is a letter based charting software. Charting setup is called, technical tool is called market profile. So 950 to 945, it is a one letter will be there, A. Then 9:45 to 9:15, there will be B. 10:15 to 10:45, C. 10:45 to 11:15, D. 11:14 to 11:55, E. Then 11:45 to 12:50, G. F उसके बाद G. Sorry, 11:45 to 12:15, F. Then 12:15 to 12:45, G. 12:45 to 1:15, yeah, which one? H. 150 to 145, I. 145 to 215, J. 215 to 245, K. 245 to 315, L. And M will be only 50 minutes, 350 to 330. So every half an hour it is denominated as a letter. And the beauty of the market profile is that, for example, somebody is using a 5 minutes candle. I'm giving a question to you for to think of. Kindly pause this area and just think about it. Somebody is using a 5 minutes chart, and for example, a mark 9:15 to 9:45. You will see how many candles. Every 5 minutes there will be a candle. So 9:15 to 9:45, you will see 6 5 minutes candle. Irrespective of the price, candlestick pattern may, every candle is forming in with respect to time. Remember that. Every candle is forming with respect to the time frame you are choosing. But here in a market profile, suppose in a market profile chart, 9:15 to 9:45, you remember which letter will be denoted. You will see only one letter called A. And the beauty is that, suppose the market is trading at 10 rupee. In a candlestick from 9:50 to 9:45, only 10 rupee there is buying and selling happening. I said earlier that the candlestick is forming based on the time frame. So if I am choosing a 5 minutes time frame, irrespective of the price, I will see 6 candles at 10 rupee. But the beauty of the market profile is that you will see only one letter at 10 rupee till 9:45 ends. So every 30 minutes there will be letter coming. But if the price is trading at one area in particular 30 minutes time, you will see one letter. That is why the beauty of the market profile. So when you see only A letter at a half an hour, or only B or only C at a half an hour candle, you have to think that market not moved big way. It was trading at a particular price, so that I am seeing only one letter. But if you follow a candlestick pattern, you would see that 6, you are following 5 minutes means you see 6 candles every 5 minutes. You will see a candle coming. which indicates that candlestick pattern is forming based on the time frame and market profile is forming based on the price and the time in which that price is trading. For example, 9, 10, 10, 15, 10:45, you are seeing 10 rupee, which means that C letter will be there. And 11:45 to 12:15, you are that time is F time. That time also you are seeing 10, then you will see not E, you will see F1. That price. So if you see this kind of activity in market profile, you are seeing that it is called a noiseless, noise, very less noise. A very not crowdy candle area. Whether you can understand the market, it is using the market profile only. So you have to, if you don't check the thing, you kindly pause here and the time, you just note these time frames in your book, so that hereafter I am saying a period means you have to think that 9:50 to 9:45. This is the basic structure of a market profile starts. For example, what I said, market profile is derived by Peter Stettler in 1959. It was introduced to the public by Dalton in 1985. Right side, either right side y-axis means it is putting price, and the x here in the horizontal vertical axis may the time is putting, and market profile is giving two things to you: what market is doing, and the second question it is giving to you to answer, which is called, is it doing a good job or bad job. And it is the medium of listening to the market. Like every candlestick, every technical tool, it is also a technical tool pattern for to listening the market. And the auction market theory and time, price, opportunity, TPO chart, and Dalton is added oleum to avoid risk in our training system. So, and this is basics. Kindly watch this video, kindly pause and watch multiple times. So it is a new technical charting pattern for you to understand in depth, and you need to give time to understand in depth. So thanks, and once again I am giving a thanks to you for to watch my video regarding market profile. We will cover all the basics to advanced market profile in 10 plus videos, and every video will come in every Sunday, so that you won't miss anything about market profile. I'm giving it free for you. Kindly share, kindly like, and kindly comment, so that I can come up with a more videos about market profile. And market profile ke once the market profile ends, I will start with order flow, so that you can understand order flow for free. I'm not giving anything, I'm not charging anything. I'm giving it, whatever knowledge I studied through market profile and order flow, I give it and divide into multiple videos, so that you can watch, learn and earn from. And thanks for watching the video. And this I'm taking a vision break. Take care, bye bye, and